Hey everybody, welcome to another Texas Market Snapshot, a cold one. It's so cold in my office, oh my gosh. This is quick hits on rates and real estate, hopefully to keep you ahead of the curve. So let's start with the big story of the week, and really it's about last week's Fed meeting and what it actually means for rates right now. So the Fed cut rates by a quarter point, everybody knows it was expected, but the tone mattered more than the move. Powell openly acknowledged economic slowdown, softer labor conditions, and even went as far as saying job growth has likely been overstated. Yeah, we've known that for years, okay? But it's good that they're admitting it. And finally, we're getting some honest reports. Hopefully that trend continues. But the translation right now is, at least for the time being, the Fed is done fighting ghosts, and the pressure is now to support growth. Now, that said, mortgage rates haven't fallen yet, and that's normal. Rates don't move on headlines. They move on market dynamics and the bond market. And right now, we're sitting at one of the most important levels we've seen in years. Every time we've been at this level on the charts, 2020, 2022, 2024, the bond market wasn't able to break through. When that happened, mortgage rates bounced higher, tested the top of the range again, and it's taken 6 to 12 months each time just to get back to the levels we're at right now and try again. And that's why this moment matters. So the short-term potential for lower rates from here is limited. The risk of higher rates is meaningful. It doesn't change my thesis. The trend, Fannie Mae's forecast, history confirms we will see rates settle in the high 4s, low 5s in the next 12 to 24 months, but I'm talking about this window. So the mindset right now is simple. Don't get greedy. Don't get crazy. If the payment works, if it fits your plan, this is the window you've been waiting for. If rates move lower, great. We refinance. You win twice. And remember, we have our lock and drop program to save you money on your refinance. Buyers who wait for perfection usually end up chasing the market. Now let's talk housing. Builder sentiment ticked up slightly, but it's still negative. Inventory remains elevated. Days on market are longer, and affordability is still tight but improving. Sellers still pricing like it's 2022. Those listings are sitting. Builders have already adjusted with price cuts and incentives. Resale sellers have to think the same way. That's why we keep talking about it, and that's why we keep talking about the ROI framework. It shows sellers your true floor number based on what you paid and historical appreciation. Everything you get above that is bonus. So it removes the emotion, prevents overpricing, and it helps these homes sell faster in this market. If you want more information on that, please reach out. Buyers, if you've been on the sidelines, update your pre-approval. Buying power has improved quietly, and smart sellers are negotiating. And if you're a homeowner waiting to refinance, get your target rate analysis so you know exactly when refinancing makes sense, because these windows are tight. So get in there and know beforehand so you can jump in with confidence and know, like, this is a good deal, right? Figure that out now. Have a plan, and we're here to help. So call us on that too. We'll take care of it. Here's the takeaway. The Fed is turning more supportive for the time being. The bond market is at a pivotal level. And opportunity is open, but timing matters. So be prepared, be decisive, be the buffalo. And if I don't talk to you beforehand, have a Merry Christmas and a Happy New Year. I'm your friend in home finance, Andy Tuttle. Thanks for watching.